Chairman Powell, I recognize, and you've been very consistent, that you manage based upon your direction, which is full unemployment and a 2% interest rate goal. But does the Fed take into account the impacts on national debt servicing and our creditworthiness when it considers interest rate decisions?
I think certainly the cost of programs, it all goes into our model. We don't really see, you mentioned credit risk. There isn't any credit risk baked into treasuries at this time, and I wouldn't expect that there would be, certainly in the foreseeable future.
When you look at this, do you project that treasuries will rise over the next 18 months?
So generally, that's something that staff has been forecasting ever since I got to the Fed 10 years ago, and it really hasn't happened. What's happened is that, as the Secretary mentioned, you have a series of long-running global forces that are leading to lower sustained interest rates. How long will they last? It's very hard to say. But for now, we have lower inflation trend. Obviously, currently at the moment we have high inflation, but for many years we've had low inflation, and the markets are baking in a return to lower inflation.
Thank you, Mr. Chairman. Thank you for your time. Thank you for your answers.
I thought I was muted.
He talked about credit risk, and he was asked like, "Hey,
Yeah.
do you think that our credit worthiness is at stake?"
Yeah, and well, my takeaway from this was something that I haven't heard anybody else say. He was talking about a global interest rate regime, and that there's no threat of higher interest rates, or at least significantly higher interest rates, because there is this global interest rate regime is low. And since he's been at the Fed for 10 years, the Fed analysts have been predicting higher interest rates. This isn't gold bugs or Bitcoiners or Austrian economists. This is the Fed's own analysts have been predicting higher rates, and they have been wrong since Powell has been at the Fed. So he's like, basically what's implied is they don't know why interest rates are low. That's what I take from it. They don't know why interest rates are low, and there's no need to worry about high interest rates because they don't have anything to do with it. It's outside of their control. It's a global thing outside of their control. So, Christian.
So I mean, that's something we've been talking about a lot here, and the dollar system, although it's like quote unquote an American system, it is actually kind of this like weird market, like free market system that emerged, and all of that stuff is outside of what the Fed can actually control, right? They're trying all these things to manipulate interest rates, and they really can't increase interest rates that much more. They have no choice. And yeah, I mean, again, I was kind of saying before, after the last clip, that they just don't know what's happening. This system is a completely opaque. That's the existing system. It's just this weird like monster that has just been mutating since the 70s, since it was removed from a gold standard. And this is what we're stuck with today. And no one is in control. And it's kind of like this just horribly weird beast.
Absolutely. I mean, the only other thing I would have to add is this gets at the point, what I was trying to say is that this gets to the point of the debate between, does the Fed set interest rates, or are interest rates set outside of the Fed's monetary policy? Because all interest rates are in agreement. They're all low, right? That we have a global low interest rate environment. Eurodollar futures, German bunds, Japanese JGBs, and US treasuries. Like everything is low or negative. So there has to be something outside of the Fed that the Fed can't really control.
So I guess just to tease that out a little bit more before we get into the next clip, like when you say outside of the Fed, like you're saying like a free market system, or is it just a cabal of central banks keeping it low, right? Is this just like a collaborative effort amongst these large players to manipulate these supplies to all of their benefits?
Well, my base case is that inflation it's real, and it did happen up until roughly the global financial crisis. And since then, we've had low growth, low credit expansion. And so that's a low inflation environment. So in a low inflation environment, your interest rates are also going to be low. So it's we have peak credit saturation in the world, and something has to give. You can't get out of a debt crisis by adding more debt. And so that is the problem. That's why we're all stuck at the zero lower bound, because you can't get out of it by adding more debt.